So, very warm welcome to all of you for showing up in this post-lunch session on financial lives in the digital age. My name is Janaki Srinivasan. I am an assistant professor here at IIIT Bangalore. I wanted to take a short moment to apologize for not being here in person for this session, unavoidable circumstances. But anyway, I hope this is a useful session for all of you. Now, I am sure you have all heard about the way in which digital tools are revolutionizing our lives, right? And in finance as much as in other kinds of domains. And when I say our financial lives, I mean both the kinds of people that are here today in this room, but also people who might not, for instance, be integrated into the formal banking networks. Because we have heard that digital finance will revolutionize life, especially for those kinds of people who are not included in these networks. So, for instance, here's a cartoon on the digital flow of money. It's basically this kid sitting in a North American context who has electronically transferred his parents' assets somewhere, who knows where. And he and his parents are equally puzzled by what has happened. But when we look at sort of diverse populations who are not necessarily very used to formal financial networks or to digital technologies, this puzzlement is enhanced, if you will. And that's part of what we'll be looking at today. Now, digital finance is a very vast space and we'll only be looking at two slices from that. One will be remittances and payments that are made using digital tools, and another is the whole idea of digital credit. In remittances and payments, we'll mainly be looking at the poster child of mobile money, one specific kind of digital finance called M-Pesa, which many of you might have heard about in Kenya. And the second question we are going to look at is, why is it that many of us, probably all of us, continue to also pay in cash when we have these other more sophisticated ways of making payments. Under credit, we will be looking at some of the innovative things that new digital credit companies are doing and also focus a little bit on alternative credit scoring. Now, throughout this entire presentation, I'll try and focus on some of the themes that came up, that must have come up in your yesterday's sessions around privacy, around the importance of policy, the whole idea of data and identity, and the importance of algorithms. And finally, we'll wrap up with thinking about some of the ways in which we can think about this space more productively going forward. All right. So, when we think of various tools of remittance and payments, there's a wide variety now, right? So, there's Paytm, which is the poster child of Bangalore, there's Airtel Money, we have an app like Bheem now, which allows you one interface and way of making payments. There have been age-old things like Western Union, which is used for money transfer between countries, for example. People have been using credit cards. And for the more tech savvy and geeky amongst us, some of us might also be using bitcoins, correct? But even before we go into this whole space of part of which is what you would call mobile money, let's think about what the rationale for something like mobile money is, right? So, around the early 2000s, people who were working on, say, poverty eradication started saying that access to credit needs to be democratized, right? We knew by that time that banks had not been successful in including everyone in their formal financial networks in these kind of demographics in developing countries, so on and so forth. What was also happening in the 2000s, this was a longer conversation, right? But what was also happening in the 2000s was that mobile money ownership and use was proliferating. So, people started thinking about how about if we piggyback on this widespread network of mobile phones and try and see if we can reach credit and bank accounts and some kind of accounts for saving to people piggybacking on these mobile phones. So, that was one reason. A second one is that transferring digital currency was typically safer than transferring hard cash, right? Cash could get stolen, it could get damaged, etc. Problems that digital cash would presumably not have. And finally, there was the whole question of transaction costs. So, when earlier people wanted to move money, and of course, people were doing that whether or not they had bank accounts, when they wanted to move money, what they would do is maybe send it with a bus driver who was going from one town to a village, etc. And when they did that, they would have to pay that person a certain amount of a commission or a fee or whatever. And presumably, when you started using mobile money, you started sending digital currency to people directly. This would be a cost that would be reduced. So, coming now to the poster child of mobile money, M-Pesa. M-Pesa was something that was started by this telecom company called Safari.com in Kenya in 2007. So, we are actually now celebrating a decade of mobile money. Now, M-Pesa has many firsts and numbers to its credit. It's now live in 10 countries. It doesn't operate only in Kenya. In fact, India also has M-Pesa in partnership with Vodafone. Some of you might be using that. It has 287,000 agents who help people with M-Pesa. At the end of 2016, there had been 6 billion transactions in that year. It has 30 million active customers, so on and so forth. So, very, very huge numbers, right? So, what exactly does M-Pesa do? It was basically introduced as a tool to transfer money from one place to another, one person to another. And it has a very interesting history in that the telecom companies didn't think of it on their own. They actually saw how people were using their mobile phones, and this idea came out of that. So, basically what people were doing, and this was again in Kenya, mostly in Africa, is that people were sending other people money through airtime minutes. So, those of you who remember the days of prepaid cards, prepaid currency for mobile phones will remember that there was something called, you would basically get the scratch card, you put a certain amount of, you pay a certain amount of money, get that scratch card, it will give you a certain amount of minutes on your phone, correct? Now, that's airtime. Now, what people were doing was that they were transferring airtime to each other. So, instead of having to transfer cash, they were transferring airtime. So, seeing this, telecom company people started thinking that maybe this is also a way in which mobile phones can be used to directly share money. So, that's how this came about. So, how does it actually happen though? We'll get into that. I first wanted to show you an iconic ad from 2007. So, you see what's happening here. There is a person who's presumably in a city. He wants to send money to friends, family in a village, rural area. He uses his phone. You'll notice that this was 2007. This is not a smartphone. This is just a normal brick phone. He uses it to transfer. You can see those currency notes sort of flying across, and it reaches this other person at the other end, right? So, money has been transferred. In fact, we should pause now and also look at this video. This whole thing also has, the screenshot is basically of an ad which also had a video format. So, we'll try and watch that just to get a better sense of how this works.
Now you can send Pesa fast and safe using Safaricom's new service, M-Pesa. It is the new reliable way to send and receive money using your mobile phone. Visit your nearest M-Pesa agent today. Terms and conditions apply.
All right. So, as you saw, basically what happens is that the person who wants to send the money goes to an agent, pays them a certain amount of money that's transferred into digital currency on their phone. Using the number of the person they wish to send the money to, they transfer a certain amount to them. At the other end, the receiver will go to a mobile money agent with this receipt of the money that they have been sent. That agent will then convert that back. He'll take the digital currency into his own phone and will give them cash instead of it. So, this is how this whole process really works. Now, this has continued to grow over the last 10 years. In fact, it's also been, while it's useful for regular transactions, it was also seen as very useful at moments of crisis. So, for example, 2007, shortly after this was introduced, the Kenyan elections happened and they were followed by violence and riots. And during this time, lots of people needed to get their hands on money because they wanted to move away from where they were, where there was violence, etc. And M-Pesa actually was really enormously beneficial at that time. Now, from this, I want to go on to looking at some of the features of M-Pesa. Now, M-Pesa has been the poster child of mobile money, but people have been trying to replicate it in different countries, scenarios, etc. But it hasn't always been as successful, right? So, why? And in fact, even within Kenya, what has really worked with M-Pesa have been remittances. After that, people have also, M-Pesa has also introduced other ways in which you can pay, say, merchants, you can save on your mobile wallet, etc. That hasn't really taken off, or at least not to the same extent as remittances have. So, let us try and think about why this is. What is the specificity of M-Pesa in Kenya which made it so successful, right? Some of these we have already looked at, but let us sort of recap. Now, one thing that perhaps didn't come through as much in what I have been saying so far is the importance of regulation. Now, Kenya used what is called a telecom-led model of mobile money. What does that mean? M-Pesa was basically introduced by Safari.com, which was a telecom company. It wasn't introduced by a bank, right? So, there are two ways in which mobile money has typically been introduced around the world. One is the telecom-led model and the other is the bank-led model. A country like India, for example, follows the bank-led model. Now, what happened in the case of Kenya was Safari.com was a huge monopoly. It was the biggest telecom provider in Kenya at the time, and it also had, it already had a dedicated subscriber base, right? So, that made a huge difference when it came to things like remittances. Now, the other thing was also that already people were sending remittances to different places. It might not have been through M-Pesa, but they were doing it anyway. So, those social networks also existed. Now, when these things change, like in the Indian case, for example, which is a bank-led model, what that means is that mobile wallets and mobile money is treated as a banking transaction. So, you have to be a bank in order to say take deposits, take savings, pay out money, etc. So, because in the Indian case mobile wallet was regulated by banking regulations, things were slightly slower, right? It was not led by a telecom company. So, basically telecom companies would tie up with a banking partner and only then a mobile wallet will be launched. Now, this is not a bad thing in and of itself, but what happened was the regulators constantly shifted what these kinds of mobile wallets were allowed to do and what they were not allowed to do. So, in 2016, for example, I was doing research in Kerala among fishing communities trying to understand their adoption of mobile wallets, right. By that time, India already had Airtel Money for quite a few years. It had Vodafone M-Pesa and also some other companies. And it wasn't really being used as much. And from the telecom providers' point of view, when you ask them why, given that people had access to mobile phones, etc., why they weren't pushing for mobile wallets, one of the things they said was that the regulatory space was actually shifting very quickly. So, for example, by 2016, they had given out payment bank licenses to some of these mobile wallet telco companies, which basically means that they could now do more. They could take deposits, for example, right, which was not the case the previous year. But because things were constantly moving, telecom companies weren't necessarily sure how much they wanted to focus on mobile wallets. So, that's at the supply end. Now, at the other end, Kerala might be a bit of an exception in this case, but people already had access to ATMs which were fairly close to where they lived. So, cashing out money or access to cash was not necessarily seen as such a big problem. So, in the Kenyan case, the level to which the banking infrastructure had failed wasn't necessarily true in the Kerala case. So, that was another reason. This might be another reason that a mobile wallet, mobile money kind of scenario doesn't work, isn't equally successful everywhere. Now, coming back to Kenya and why it did work there, another big reason was the widespread network of mobile money agents that M-Pesa deployed, right. So, one of the reasons for the earlier failure of the banking infrastructure was that bank branches could not be everywhere and they didn't reach many parts of the country. But mobile money agents, on the other hand, were much more widespread. An interesting sort of corollary to this was also that mobile money agents typically tended to be of the community that they were serving. And what this meant was that people could tended to trust them more. Now, having a local member be an agent comes with its pros and cons, and we'll look at some of the cons later. But basically, people who were not necessarily very conversant with how to use something like this felt okay going up to mobile money agents who they knew, who were from their community and who would help them in this whole process of money transfer. And by all accounts, these agents have been critical in how well M-Pesa has worked for remittances. Now, one of the things that we want to think about in light of the earlier sessions that you guys have taken is that with sort of the uptake and the introduction and uptake of mobile money, there's also a lot of data that is getting generated, right, about how much money people store, how they spend it, what they send in terms of remittances, etc. So, it's always worth asking who has data about these customers and how it's being used. And I think what makes all of this even more important is that especially in the financial inclusion sort of conversations, many of these people who have mobile wallets might be people who are used neither to formal banking networks nor necessarily to the use of digital technologies. So, I think these questions become very important in light of that. And when we come to digital credit, we will again see that another person who might have data is actually the mobile money agent. So, how do we think about the kind of data trails that people are leaving behind? How do they think about the data trails that they are leaving behind? Now, finally, I want to sort of bring these threads back to the idea of cash, right. So, we are talking of mobile money versus cash in a way. We are talking about what are the advantages that mobile money has over cash, why is it that it made remittances easier, etc. But I want to take a step back now and think of why we continue to keep using cash. In fact, if you take a moment and look at the M-Pesa case, even there that's not cashless, right. So, what is basically happening is that this person is going to a mobile agent, paying them in hard cash to get a certain amount of digital currency. Now, that is getting transferred, but at the other end it is again cash, right. That person goes with the receipt and gets what is called cash out. So, they transfer the digital currency to the agent, but in return for that they get cash. Now, in the Indian case, for example, because of regulations, cash out was not allowed. So, basically what that meant was that you had to transact in the digital currency itself, use that to pay something else. You couldn't actually use it like an ATM and take cash out. Now, why is it that we are so attached to cash, right? That's the question that I want to come to next. All right. So, I think the place for cash in an economy was something that came to the forefront, especially in the Indian case, slightly over a year back. Now, this was a picture that I received on WhatsApp and I received it on November 8th, 2016. So, let us pause for a moment and ask what was the context of this picture and what did it mean.
After 500 and 1000 rupee lost their identity as a legal tender, they were just mere paper which can be used. They can be used for any purpose, like a paper, but they have lost their value as a currency. Yeah, we can use newspaper for anything, right? So I can use it for any. It's just a paper now. It doesn't have any other value, or you can store it as a memory or something. But
I think this image is quite funny because it kind of portrays that those currency notes do not have any value, but still you are supposed to exchange it because you earned it. You're supposed to exchange and get the new currency note. So, I mean, it's not as simple as it seems. Like you can use it to show peanuts, but till before the deadline, you have to exchange it because they still have some value, and you need to get it back.
Saying how he promises to pay the sum of, pay the bearer the sum of 500 or 1000. So it's just a satirical take on how this is nothing but mere paper.
I think my point is related to the future of this kind of currency system. I mean the value of the digital money. I mean the way we were exchanging the money. So it was, it shifted into the form of a digital currency. That is what I would say.
So this is a creative answer. So it's like an Indian jugaad. So once it has lost all its value, the person is also trying to make use of the last bit of, what he's losing after demonetization. Yeah. So it's just an Indian jugaad for that instance.
On digital money, we used to say that we can't rely upon that. Means on the starting time, there was you don't know at what time that is going to disappear and what. At starting time, there was some news regarding this digital money. But when compared to this image, here regarding the RBI note also, we can't say that at what time this is going to disappear. So it's a comparison, I guess.
Actually, sir, paper currency may lose its value for some time or time period, but the digital currency will not. So by this way, we can use the more payment method like in digital mode. By this picture, we can see that if the paper-based currency can lost its value sometime, but if it is the digitally currency, then it will not.
As ma'am has focused on the point that why do we still use cash? So India needed such a big push, as big as the demonetization, to push the currency towards a little more on a digital note, you can say. Because even me, I started using Paytm and all these digital modes after demonetization. Earlier, I wasn't even, induced to use it.
So presumably, some of you figured out that November 8th was when Prime Minister Modi declared that two denominations, the 500 rupee note and the 1000 rupee note, were no longer of any value from midnight that day, right? I'm sure all of you remember that moment. Now this picture basically depicts that suddenly these notes are only worth serving peanuts in, right? They have no monetary value. Now you would imagine, and demonetization itself also fostered this vision, that with this move, alongside various other goals that it had, was that people would switch over to more convenient ways of transacting, not continue to stick with cash, right? Yet, when you went out the day after, what was one of the iconic images that you saw in newspapers, on the road, etc., was lots of people queuing up for cash, right? Now the question really is, why were we then and why are we still hankering after cash? Why do we need cash when there are so many other ways of transacting? Now, one way to think of that is that obviously there weren't enough people who were willing to take something other than cash. So there is definitely that part. But the other reasons. A very dismissive way of thinking about this would be to say that, well, some people just don't like adopting new technologies. We just have to either wait for them to catch up or, somehow coerce them into using that technology. But if we try and actually understand why is it that people place any value in cash, I personally feel that's a more useful way of looking at this. For instance, look at this. One of the, and I know this is not the only case where this comes up, many of you might have seen newspaper headlines, heard anecdotes, etc., about how angry housewives were when the demonetization move was announced. Maybe you can see if any of you remember. But anyways, what this headline really says is, for this Kanpur housewife, demonetization meant losing a sense of safety. Now, what was really happening is that housewives like this one and many others across the country were used to saving cash left over from their household expenses in the house. Now, they saw this as a store of safety. It wasn't something that they necessarily provided accounts of to their husbands. So, in a sense, it was their own sort of secret stash that they could either use discretionarily or use in times of emergency, etc., use in times of crisis. So, they basically saw this as a safety net. And what demonetization did was, because essentially much of this might have been saved in the notes that were demonetized, people had to return it to the bank. And as soon as they did that, obviously that cash became visible, and housewives started to feel that it became part of an account, right? So, it was no longer their secret stash that they could immediately dive into in times of emergency. And again, I think these graphs also show the same thing, that people's reliance on cash continues, right? So, you can see that the number and volume of mobile wallet transactions really peaked just after demonetization. Then they sort of stabilized there, and they have actually started to drop. I mean, of course, they are still more than the pre-demonetization period. But I think it's worth asking why these fluctuations, why is it dipping, even though today you would say that right after demonetization, in fact, there were issues of, you might remember, people would go to merchants, but those guys won't necessarily have the card reader, right? So, there were issues like that. Presumably, those have stabilized over time. So, you would have expected much more a peaking of mobile wallet transactions, but that isn't happening. In fact, it's even coming down. So, why this going back to cash? Are people just a bunch of Luddites, or is there more to it? Before that, I want to just take before we go into all the reasons, I want to take a moment to see how all of us really transact, right? Maybe take out your wallets, that's what I have done, and I have put out a few of the things that I found in it, and see what kinds of things come from it that you use for financial transactions. And then also take out your mobile phone and see what kinds of things there you use for different kinds of financial transactions. So, when I took out mine, for example, I found a couple of credit cards, fairly normal, one of which I use when I travel to the US and because I used to live there. The other one is an Indian credit card. I have a little bit of cash, and I also have these other transport cards, right? So, these are things that I have loaded up with cash, but which I can only use in specific kind of venues. So, I have a Bangalore Metro card. Now, I can't go and use that for, I don't know, buying carrots, right? It's a very specific kind of a currency if you think about it. And of course, I have cash, as I'm sure all of you also discovered you do. Now, what is the point that I'm trying to make with this? There are a couple of one thing is that besides all the sophisticated digital technologies we saw, obviously we also, all of us use cash. That's like the sort of baseline insight from this exercise. We also saw that there are other kinds of currency, right? Besides the transport cards that I showed you, which work in very specific venues and which I paid for with cash, there are also other things like, I'm sure many of you have frequent flyer miles, right? So, basically, you pay for that through miles, through how the extent to which you travel, and you can convert it back into various things. It can be gifts, it can be other travel, etc. So, that is also one kind of currency. So, we all deal with various kinds of objects and currencies when we go about our financial transactions. That's sort of the larger insight.